You are listening to chartingwealth.com, and today we're going to cover our weekly market worksheet. I've actually taken the liberty of filling one out for you for the week ending February the 24th, 2017. We're going to look at the charts and how we actually fill this out. Now, we're going to start with the S&P 500 as depicted by the exchange traded fund SPY, and we're going to go over how we fill the information out and why. We may look at a couple more of these also, and just make sure you understand what it is we're doing and why. Now, this weekly market worksheet takes the place of your daily market worksheet for Monday, because what we're doing is we're covering what happened over the course of the past week, and we're getting ready for the market opening on Monday. If you still want to fill out your daily market worksheet for Monday, you can do that too. But again, we're just trying to give you both a weekly overview and then the daily overviews that you'll do for after the close of the market on Monday, Tuesday, Wednesday, and Thursday. So let's talk about what's going on. The S&P 500. What do we see here? Well, the first question we ask is the weekly vertical crossover. When did it last occur? We look on our chart. It actually occurred back on the 25th of November. Now, what is a weekly vertical crossover? Well, it's when the price percent oscillator, the PPO, that's depicted on our chart as a blue line, crosses over the red line, which is the signal line going up. The signal line's just an average 8-week line, and it just gives us something to chart movement by. The price percent oscillator, we've got a great training on that. You can also look it up at Investopedia, any other place. It's very similar to the MACD. It uses price percent instead of just the movement, the percentage movement itself, which we find is so much more helpful because you can actually compare this with stocks in a class or index to stock, various different things, and it works in a different way. Very similar, calculated. You'll see them match up a lot of the time, but because it is not an absolute but a price percent, over time it actually gives you more accurate readings, and you can read about that again at the website Charting Wealth. So we have a weekly vertical crossover. We have actually noted that. Now, one thing that we've found is that when you see these weekly vertical crossovers, you want to jump in as soon as possible. We have found that Mondays following the weekly vertical crossover after 10:30 or around 10:30, after idiot hour, which is that first hour that the market opens when the market makers have a lot of control under the rules of the exchanges, can fluctuate price quite a bit, and are standing there, well, I don't want to say manipulating the market, but they have a lot of control over what they do that first hour, and it's a little crazy sometimes. So we wait for that to settle down, then we look at a good buy-in point. Well, what we are charting is when that occurs, we look for a jumping in point, and we want to make sure that we continue to ride that train as long as it goes in the direction that we want, which is the direction of the crossover. In the case of the 11/25/2016 crossover, that was in the up direction on the S&P 500, so we note that on the PPO. We also note the details of what happened over the course of the last week, and that is continued strong upward movement. We also note the derivative oscillator, which are the green blocks, the shaded green blocks or the red blocks behind the PPO. We note also there that we've seen again over the course of the last week that vertical block getting stronger, that is getting longer in this case, going up. So we note that continued strong upward movement. Candlesticks. Well, we note that this is the fifth green open box candle. Green open box candles typically connotate strong movement with the Heikin Ashi candlesticks that we use. Again, another good training at the website chartingwealth.com on Heikin Ashi candlesticks. You need to understand that. It simply helps you relate price movement. Heikin Ashi in Japanese means average pace. That's what we're really going for because, again, we are trend following. We are not trying to forecast. We're trying to trend follow. So we've noted that we have, strong candlestick up movements, Trend line. Well, this is talking about the weekly trend line, which we draw. We attempt to connect 3 candles if we can. Here we've only been able to connect 2, so don't rely on that trend line as much as a more connected trend line might be. But we note strong movement above clearly established trend lines. So our markets closed well above the weekly trend line, which is a good sign. And then comments for the whole week. Trend continuing, some weakening in the 2-hour chart, but 2-day chart still strong. So after we check out the weekly chart, we want to go look at the 2-day chart. The 2-day chart is still strong, still well above not only the weekly, but the 2-day price movement on our trend lines. And we see that the PPO is continuing to move up, staying away from the red signal line, and the derivative oscillators continuing to move up. So those are good signs. And then on the 2-hour chart, what do we see? Well, we see the 2-hour chart actually crossed over going down sometime in the afternoon on the 22nd of February. Price movement continued up for a day or so and then dropped down and sort of headed up toward the end of the day on Friday. So we're just noting to be cognizant of that. Again, price movement on the 2-hour chart is still above the 2-day trend line. If it goes below that, then you might have some warnings go off also. But we've noted that we still have a strong 2-day, and of course we still have a strong weekly chart. That's what we do. That's what we write down on each of the 4 indexes: S&P 500, that's SPY, QQQ, which is the NASDAQ 100, TLT, which are bonds, and gold. Now, we are in various different trades right now. We had a crossover on the Qs back on the 6th of January. We jumped in that and have ridden that up wonderfully well. In fact, that is up somewhere in the neighborhood of about $10 from our jumping in point on the weekly chart. And it has been absolutely beautiful. We jumped in the Monday following the crossover around 120, closed on Friday around 130. So that is after less than 2 months, $10 on a $120 ETF. That is an incredible amount of positive price movement. Anywhere cashing out along the way would have been beautiful. So we're very, very happy with that up movement. And one thing I would like to point out before we leave here, because one of the charts did just have a crossover, and let's explore that a little bit. That is TLT, and that is actually the 20-year bond fund. It hit a bottom on our 2-hour chart around the 23rd or so of December, right around Christmas. Bonds looked like they bottomed down on the 2-hour chart. Crossed over finally on the weekly chart for the week ending the 3rd of February. And again, we looked and did jump into one of our practice trades, our virtual trades, the Monday following that Friday, which I guess would have been the 6th. We jumped in there, and what happened is the market sort of slid sideways for a little while. Didn't make us feel all that comfortable. We also had, for our traditional trades, we also had a 2-hour crossover that allowed others to get in. And then we saw the market take off, going up 1.11% on Friday, gave us a positive week. Things were looking good. Let's delve into what we wrote down on our weekly market worksheet for TLT. We noted that the crossover just occurred back on the 3rd of February. We noted the PPO and the DO, that is derivative oscillator and the price percent oscillator, are both going up, rocketing up pretty nicely. Continued stronger upward movement. Now stronger because it had not been as strong. We also noted green open box candle with small wick on the top and small wick on the bottom and larger wick on top, which means there was some down movement below the opening during the week and lots more upward movement that later burned off. So we note that. And we also noted trend line, unable to draw a trend line yet. Last week was a red doji, so there'd been a lot of indecision on the chart in the prior week, so it had not been all that strong. So we note that and just keep that in the back of our head. And so we don't have a trend line to track on the weekly chart. We do on the 2-day, we do on the 2-hour. And then comments. Trend continues, strong upward movement on 2-day chart, okay, because we always look at all 3 of our charts. And we had strong upward movement on the last 2 days of the week, Thursday and Friday, strong upward movement on that chart. We noted that on the 17th and on the 24th. And then we note that kink up on 2-day PPO, strong upward momentum on the 2-hour. So we do see where things kinked over, things were sliding more sideways and really moved up over the last 2 days. And we did have, of course, strong movement back up on the 17th, and then 4 days later, well, after a 2-day hiatus where there was a bit of a pullback and some questions, and then things took off again. But if we look at the 2-hour chart, we do notice how the market rocketed up starting on the morning of the 24th and moved up throughout the course of that day on all 4 2-hour candles. So we note that. And that, again, noting these things down at the end of every week as we get ready to move into the new week gives us alerts if we're about to see changes, if things are losing energy and we might be getting ready to jump into a new trade, or if we have warnings and need to be careful because things might be losing energy and we might want to be pulling out. And we sort of note concerns on both the Qs, the entry there, and on the gold entry, the gold play that we have been in. We note 2-day candle on 224 shows first strong up movement since 210. 2-hour shows strength and upward energy. So if we take a look at gold, we will see that playing its way out because gold had actually lost some of that upward momentum on the 2-hour chart and then took off again. So it helps at the end of every week to sort of note where things had been and where they were going, particularly when you've been in a successful trade like we have been in gold since the end of January. And in fact, on our 2-hour chart, on our weekly chart, it's hard to see that on the 2-hour chart, you can actually tell much better what went on with gold when we had that crossover occur for the week ending the 27th of January, and we've got a nice weekly trend line showing that upward movement. That is how you utilize the weekly market worksheet that we have designed for you. If you want to supercharge your training, doing that daily market worksheet Tuesday, Wednesday, and Thursday, and then making sure for what happens on the market on Friday, you recap everything with your weekly market worksheet so that you're able to be ready for what goes on Monday is extremely important for you to do. You will find that it will supercharge your training. It will give you a good view and a good grasp not only of what's happening day by day, but it lets you step back a little bit with this weekly market worksheet and get a feel for what's going on in the overall market and what might be coming up, making use of all of our time frames, trying to see everything and stepping back like we do typically when we record this for you on Friday afternoon really gives us the ability to assess the overall markets and where they have been and where they may be going. That, my friends, is what we have for you today. We always love to hear from you. If you are just getting into Charting Wealth, please make sure that you've gone to the website chartingwealth.com and signed up for our daily newsletter. With that, we send you important things, the 15-minute how to read a stock chart video, the layout from freestockcharts.com, and the daily market worksheet, plus the weekly market worksheets. Those are PDFs, and you can download those yourself. Print them out, fill them out on a daily basis for the daily market worksheet, and then once a week, the weekly market worksheet. Keep those in your trading notebook, and they will be invaluable for you. I cannot tell you the magic of pen to paper, writing it down, thinking about it, and then watching your file build and your understanding build because you've paid attention and really put it into your mind and into your subconscious. It's so important. I cannot emphasize how important it is if you want to learn how to read a stock chart. Because, my friends, if you can read a stock chart, it's like having the Wall Street Journal a day, a week, 2 weeks early to be able to help forecast. And again, I'm careful about using forecast. Help you accurately trend follow. That's what we want to do. God bless so much. Thank you. And again, open up your trading account, and we're talking about a virtual trading account at any of the online brokers, and practice with us. We're not a stock calling service. We're not giving you investment advice. You don't pay us anything, and we are not in any way giving you trading advice. We want you to practice with us, and when you get good and you start developing your own skill set and your own little tweaks and way of doing things, because every trader and investor is different, you develop your own art and science of making money in the market. And when you get good enough, and you can do with us practice trade after practice trade after practice trade where you make money and are in the green, then and only then can you make a decision with your own money as to what you want to do with it and how you want to risk it. God bless. Take care from chartingwealth.com.